The litigation finance industry in the US is relatively new compared to the more developed markets that exist in Australia, the UK and other parts of Europe. Continuing the trend in growth is now Canada, which has begun to adopt litigation finance on its own terms. Like its Commonwealth sister Australia, litigation finance in Canada found its initial step in class action funding. This was in response to the increasing costs of litigation and the risks of a loser pays system. Over the last few years, Canadian courts have approved litigation funding agreements in the class litigation context despite the champerty and maintenance doctrines that were strongly adhered to in Canada. An open question has remained, however, as to whether courts would permit litigation funding in private commercial disputes. A recent decision by Justice Thomas McEwen of the Ontario Superior Court suggests that the trend will continue in favor of allowing commercial litigants to access financing while establishing judicially imposed limits. While Justice McEwen denied without prejudice a motion to approve a litigation funding agreement between a UK-based funder and the plaintiff, a Swiss resident who was seeking $10 to $30 million in damages for a breach of contract case. The court said that it would approve the agreement upon a revision that would cap the funder's share of recovery at 50%. The decision was the first to positively endorse a litigation funding agreement in the private commercial context.